like pre-market, right? So basically, like everybody sees, oh, they had this, riot at their phone factory or whatever. I'm gonna get puts on that. But then, intraday it was flat. It dipped and then came back up. So there really wasn't a trade there if you didn't get in early, and it just tends to be like that. I mean,
Are you
especially
on
that one.
are you on can you see in the Discord?
Yeah, yeah,
I mean that's my line for Apple.
right, right.
I mean, I don't cuz I kind of treat it like Tesla, right? But
Yeah,
I mean, it is what it is.
yeah,
um and to be honest with you, I got I got that line from Tune.
yeah,
100% honest from him. 100% honest about it. He
yeah.
he called that once, and I looked at it, and I was like, yeah, that's a good spot. I
Yeah,
don't.
it's a big magnet in for option strikes. I mean,
Well, it's
for
one
sure.
fifty. It's 150. $2 under
Yeah,
150 for some reason. People think they're getting a deal right there, but
right.
or that's where a stop loss is, right under the 150. I don't know, but it just for some reason it gravitates to that. Um, it's just hard for me to trade. We've talked about it before. It's hard to trade that, right? The way I like to trade. I can't buy
Oh yeah,
fourteen
but on
hundred dollars of Apple and make $1,800 back. That's hard to
the
do.
the share side's no good. I mean, it's either you just buy shares and hold them forever, or you can trade weekly options on it. The only two ways I see to really trade Apple, in my opinion.
So I have some full disclosure. I have a friend that's Apple employee, um, not like high level, like actually does a training for people coming in, um, but they get paid. The part of their compensation is shares, and I forget what she calls them. They're like founder shares or something like that, right? Because
Yeah,
you're the first owner of them, but she will not get rid of them ever.
right, right.
And I'm like, buy low, sell high on the stuff. And
Yeah,
she just will not. So she's had and you get them at cost. So, her cost basis might be like 125, 115, because
yeah.
because when they give you shares at 160, it's going to bring your cost basis up every time. Um, but yeah, you just kind of are just kind of hanging out and taking the dividend at that point in time. It's just,
Yeah, I mean the percentage of like Berkshire that's Apple now is just insane. I think it's like 44%
yeah,
is Apple. That's crazy.
yeah.
And he was late. I mean, he says he was late. He's like, I didn't really kind of get, what the company was and its potential, and then they, saw the App Store and all that, and got into it. But yeah, yeah,
I read somewhere I'm pretty sure it was them. We're thinking about buying Disney.
right.
Did you see that, or am I just
Yeah, yeah. No, I I,
is it
I did see that.
or is it just too early? Okay, okay.
Yeah, our
So
Disney level is good. Is
yeah,
I like it. It's one of my
yeah.
favorite ones right now.
92 ain't bad, is it?
Yeah.
What I like, okay, so let's talk about that real quick. What I like about Disney, because it works for me, I don't know if it works for you, is I have 92 as the bottom, but I can ask you for these 103 flow reads,
Yeah.
and it's very accurate whether it's going to make it there or not. So I like that part of Disney. Um,
Right. Yeah. What I would say about the flow on it, especially for a mega cap, it's not noisy. And by what I mean by that is Tesla is extremely noisy in the flow, to where it's just all over the place. Calls, puts, they're just like scalping the hell out of it. Whereas Disney, you see them flood in at these moments where it's in the lower 90s and you can get a cleaner read on it.
yeah, I mean, I guess from the share side, it was the same way. Like the way it rejected being in the 80s, like the psychological number of 80s just triggered everyone to buy, and it didn't stay in there long. And that's the same thing. The flooding in of buyers at a certain level
Yeah.
is stands out.
Well, and
Um,
it just also, if you have a reliable level, as far as earnings go, it pays to pay attention after hours and pre-market, where it'll dip briefly below a very solid level. It won't stay there very long, but if you're paying attention, you can get in at an insanely good price on something. on these stocks that bounce back. And even like you did that, and a couple others. Everybody always wants to pile into options because they want that overnight lotto of $100 to 1,000. But on the share side, there's a lot of opportunities there too.
Definitely, definitely. What? I'm totally on your plate this week. What
Yeah.
topic? What topics you got going? I got spy, obviously.
Yeah. So I've got SPY. I want to do kind of a basic materials update just based on what I'm seeing in copper and aluminum. And I don't have a lot uh, to say about crypto. I just think we're kind of just waiting for the next event, whatever that's going to be. Otherwise, it's just going to sort of follow NASDAQ. And want to talk a little bit of oil, natural gas as well.
All right. I figure we'll talk a little bit. There's some numbers next week. We probably should go over those a little bit too.
Oh yeah, yeah. The Fed calendar for 2. Yeah, definitely.
Yeah, perfect.
Yeah.
All right. Where do you want to start?
All right. So let's get into this basic materials a bit. Kind of fresh on my mind from
Perfect.
what I was looking at. So, okay. So I talk a lot about copper as this kind of benchmark for all of them, and it's just been really reliable for me. So we for a couple weeks, well months actually, from September through most of October, we're hovering right under 350, and 350 is this real key level in copper. And we had in November spiked almost to 4. So it claimed 350 and just went almost to 4. Had this huge run in X and CLF and all those. And now it's come back down and it's kind of stabilized around 362. So my whole take on basic materials as I read flow within this context is that I am bullish on breaking through some levels as long as copper stays above 350. I think the setup holds together. So in my notes when I'm talking about X or AA or FTX or whatever, that well, like X is an example. So X is kind of above my lines. I caught it under 20, and now it's 25, and it if copper was struggling right now, I would say I'm really confident this is going to check back down. But with copper up here, this can push to 30 and past that. The same exact thing that I saw happen back in February of last year. So that's sort of the setup I'm looking at. Any flow I read on basic materials is within the context of staying within that $3.50 to $4 range on copper. If copper breaks through and goes above 4, that's where you see X could go to $40 if that happens. So how far this is going to push is going to kind of depend on that. Ideally, like for an entry on something like X, you'd want it to check back down under 24. If this uptrend is going to hold together, I don't know that we're going to get that though. So so that's my basic reading on that, and it's where like futures to me, just kind of the ES or the NASDAQ futures are not that useful for what's going to happen the next day. But when you start talking basic materials and oil, there's some key levels to pay attention to, and 350 is the number for copper.
Yeah, and that affects several of the plays we have.
Yeah, Cenex and AA and all those.
Yeah, those are the two I was definitely thinking of for my personal. How do they relate to the U's? Not so much.
No, not really.
Okay.
Yeah.
I like those two, so I like to ask.
So the like you're asking about uranium.
Well, yeah, there's those the 2 weeks.
Yeah. Okay. So uranium. I can kind of give you my take on that. Basically, it's
so good.
We got to move off 50. So if we're below 50, I'd stay away from uranium. but at 50, we're kind of in a good spot, and just need to see that. Um, Basically, like 52 lately has been what it has. Every time uranium's been moving to upside, it's a test of 52, and this is a commodity that doesn't tend to move drastically, but if we actually break through that 52, that's when those will really start to go, and we'll get some of those moves like we had a couple months ago.
Nice. No, I like them. Probably one of the best sectors, to be honest, that you brought, because it's kind of its own market in general. Like everything moves at a different pace. Like all basic
Yeah, yeah.
materials and metals don't come together; they kind of rotate. So if you learn the sector, you can not necessarily learn the rotation, but learn what drives each one, which I think that's more important, or a better catalyst than just the standard rotation. Like you have something else you're looking at that pushes these charts a decent percentage. Yeah,
Yeah, that's really how I got into them. I was just in the like when I started trading, that crazy bull market was starting to kind of wind down a bit. Small caps were kind of dying. So I was just kind of looking for something because I just like to trade the upside. So when I started studying, I kind of found basic materials and sort of latched onto that, for really for that reason. Just to the moves are kind of sustained, and there's a lot of information I can read and interpret in those. So I like it.
definitely. How does I know it's kind of there, but like gold and silver right now, I've noticed those have kind of been trending in that direction as well.
Yeah, gold is in a really good spot right now. I think in terms of the flow I'm seeing on it,
Is
and
that
a lot
is
of times in gold when these new names pop into my filters, that's usually a good sign because it's like whales are just sort of sweeping around, getting they're in the big stuff, but they're picking up some of these names that lag a bit,
yeah,
and
yeah.
so yeah, that's definitely something I look at. One that
Why is it though? Is it because of um, like demand and products, or is it because of, I hate even talking about it, but like rotation out of other assets, i.e., like crypto? I mean, what's pushing those prices right now? Because
I
gold's back to like 1650 again, or 1750. Sorry, I think it's almost to that 1800 number, I
yeah,
believe.
I mean, and you had a little bit of a bump from
Yeah, 1750.
like Ghana, I think, or somebody had some big push in gold. Let me see what the actual story there is. So
Ghana says Bitcoin is a
yeah, Ghana
scam, buys gold.
enhances gold purchase program, and there's sort of an impression that that's going to become um, kind of a thing in emerging markets, that they're gonna sort of up their investment in gold.
Yeah, just a lot of those, both of those, the ones that we've talked about several times, um, over the past year, because we have a pretty good list now. They were all hitting the filters when I was on last week, early in the week. It was just interesting that even like the big and the smaller ones, on the gold side for sure.
Yeah, and I think from a TA side, what people always talk about is that gold is in this huge monthly cup and handle, and that we're sort of in the handle right now or something. I've read a little bit about that, um, and yeah, so that's like from a TA side, people feel like gold could have this historic run.
Interesting. All right, let's move on to how about oil? Let's just go right in. That's kind of all. We talk about the boring stuff on the planet. I'm sorry, we're not going to talk about video games and
Yeah,
social media, but sorry, no Elon here
uh,
today.
yeah. So oil futures, still under 80, sitting around 76, and you still have um, the stocks themselves, trading at some of them, near their all-time highs, and like Oxy's still over 70, So I've been talking about how I guess my read on oil is that this difference between the stock prices and oil prices, that divergence is going to have to resolve itself. They're either going to have to kind of meet in the middle, or they're going to, or or oil's going to pull up to the price of the stocks. Um, I think I've seen Oxy in particular, the one I look at, is very resistant to any kind of big sell off. So that to me is a sign that I'm looking for oil prices to come back up. I mean, the longer Oxy stays above 70, 69.56, an actual line on it. But the longer that happens, the more likely it is that it's just going to go ahead and break through 75. And when it breaks through 75, who knows where it could go? I mean, it could go to $80, 85, whatever. So I'm kind of I'm bullish on oil a little bit, but I'm not just kind of going all in on anything. I'm looking for upside setups, just because I haven't seen the stocks react yet to the falling oil prices. So I think it's going to resolve the other way. I think oil is going to spike. I'm not sure what exactly is going to push it, but I expect a decent move to the upside on that.
Yeah,
And given the Fed calendar too, I'm kind of bearish on Dow, SPY, QQQ. So we could get one of those situations where oil kind of runs counter to those as well.
I don't know how SPY's supports that. I don't follow it from the stock perspective as much as you do. But on like the world level, I know the OPEC Saudi deal basically saying they'll stabilize the market. Is just a change in what we've had over like the last, let's say, 15 months or so, and that divergence is going to work itself out. So when we get stability back in the market and supply and demand kind of match at some point, outside of where the prices are to the consumer, you're just going to get stability in the market, and the stocks are going to level out where they are, for the lack of better terms, or find a home where they are.
Yeah.
And I think that's what you're seeing. It doesn't always have to go back to where it was before.
Right.
But they definitely will stop. I don't know. They'll stop doing the. I guess the leaders will continue to lead, and the other ones will kind of just stay at home. I like Oxy purely because Buffett's in it. So the break of 75, I'm with you on that. I think that does continue to trend up, and then what I think is like Devon. Is that oil?
Yeah.
Like they're one that's probably gonna fade a little bit, right? Like they're not gonna hold up.
I'm looking for a pullback to around 56 or so, and then just kind of getting in a channel 56 to 70, something like that. Yeah.
And that's. I mean, I didn't even look at a chart. It's when you have a sector run hot for a year, and it's gonna be overextended. You can pretty much throw a flipping. You can just throw a dart and hit something that's not gonna hold.
Oh yeah, like MRO is an example. MRO is $30. When this all started, it was like $11. So it's to me the lower to mid 20s.
2161. 2161.
2183 is my line.
That's where it's going. I mean, that's what I think. People just oil's going to hold all these gains. If this is the first time you've ever seen a sector run, no, 2 or 3 of these guys are going to hold them, and the rest are going to come back to the bottom or where they or all the way where they were before.
Yeah, well, right. So I think, and really, like to me, Oxy basically made it to mega cap status. Like when I first was looking at it, Oxy I think was a high mid cap, moved through that mega cap, and I think it's just going to stay a mega cap. Which everything that goes with it, the market cap, stock price, etc., is going to settle up there and be like Exxon or any of those other ones. So
yeah, and then it's going to be stable up there somewhere. Like you're going to eventually find the fair market value for it. Sure. Perfect. Let's you want to go right to SPY or talk some numbers first?
Let's do SPY.
All right. How did we do last week?
Well, I think we talked about 402 as the key level. I can't remember what my upside was.
You
But
got 385. You got a little lower than me to 402, and I had 389, a little higher than you, but we both had 402.
so yeah, yeah, and that's right about where it
Where did it
where it
finish?
was. Yeah, exactly.
Oh, what did we get the downside though? What did we get on the downside?
Um, no, I don't think it ever. It was a pretty quiet week. I don't think it ever got below
392.
90. Yeah,
Yeah,
yeah.
so yeah, I was
So it
three
did. It
bucks
didn't
off,
even
$7 off there.
because I was looking. I was like, if it challenges 390 with some momentum, it could break down briefly. But it never got there. So that's good.
Yeah. I had the quick test at 190. You had the long test at 190, and we didn't get a test at 190 or 390. Sorry.
Yeah, yeah.
Um,
So my kind of top end this week,
oh, he's already shooting.
if things go, if things go well, like I think the top you're going to get is like 410, 411 maybe. I think that's about it in terms of what it can do in the flow. And downside, I don't see anything kind of catastrophic that's going to take it down. So I'm going to say, like, let me check my strikes here. Yeah, I'm gonna go ahead and say that we might get a test of that 390 level, but that's about it.
All right.
Yeah.
So, full disclosure, I don't know if I said it before I started the video, but I wasn't on most of last week, so I'm going to cheat and use my old RTL system here. And I'm going to go 395 1-year volume profile for my low. And I'm going to go 417, which is
wow.
three-year, but it's just volume profiles. I'm going to call that. And the reason I'm going to go that high is because 2 weeks ago I said sideways. Last week really didn't count as a week, let's just be honest. So it just continued that sideways trend. I think we're going to choose a direction, and I think that's going to be piling in for the December rate, right? People are going to start trickling in for that again. So I think that's going to hold the market up for the most part. Black Friday news, you get a little shopping euphoria, should get some good news out. Just think it'll be a good week. Close of the end of the month, you'll get people coming in as well. So yeah, as long as we don't have a catastrophic event, I think we'll have a decent week coming into this week. Just you kind of seen it last week too.
Yeah. No, I think that's definitely possible. And this again, we talk about that, divergence. So DIA has been, really just outpacing SPY QQQ by a lot. Those stocks have just been really hot. So they usually aren't that far apart from each other, though. So they're going to kind of find equilibrium too. And one way that could happen is for DIA to pull way back, or for SPY QQQ to just kind of melt up. And that latter option I think definitely is possible, especially like you said before Fed events. You pump it up, and then if it drops, it's not catastrophic. It's just pulling back to a level at that point. So I think that definitely is possible for sure.
Yeah, it's almost the way we look at ERs. They kind of IV pump into the event, right? Then that's what's going to happen with plays that people want. Especially if they're at a decent level, they're going to want to hold them going, into the event. Just because they're going to be up 4 or 5%, and if the event doesn't go the right way, they can just have their stop loss in place.
And on IV, by the way, so this is the week to think about 12, 16 contracts, because you're going to basically you're going to buy right now, and the IV is kind of low. And as these events approach, that IV will pump up, and you can get out before the event ever happens. And the premium price is going to increase more than just the stock price going up or down, whichever side you're on. So it's a very good week for an entry into implied volatility, and that's going to go up as the week goes on and into next week.
Yeah, I've always thought that was a better way to play that. Like I'd be looking at who has earnings 3 weeks out, right? And
Yeah,
like
yeah,
that's I mean
exactly.
that's because you're just gonna get that natural pump. It seems like and you just sell into that, and then you're done with it. You don't even got to play the event. Um,
Yeah, and I mean, especially ever since uh, like Facebook and um, PayPal and all those, like when they had those huge drops, like people are looking for that every earnings, and you get in early, and then all of those gamblers pile in, and you don't even care which way it's going to go. You're kind of collecting that IV pump, and then you just sell it, get out, keep one for free if you want to, but that's so much better than just doing the Starboy thing and piling in late, and going
day
zero.
of, day of,
Yeah,
10 minutes
exactly.
before
Yeah.
close.
Right. Yeah.
What are you doing?
Yeah.
Oh my goodness. Yeah. I'm definitely with that. So let's talk a little Feds. There's a lot going on there.
Yeah. Absolutely. So so they had the FOMC minutes on,
It's
I guess that
Wednesday.
was Wednesday,
Yeah.
but it did not have the Powell speaking right after, which has like the pattern has been it makes the initial move and then you fade that move when Powell talks. But
Mm-hmm.
because he didn't talk, it spiked and then just sort of stayed flat. And it didn't spike as much as they had in the past. So with the short week and everything, it wasn't really a good approximation of what was going on. I think my take on the Fed is like don't read too much into what they say. That they tend to just like don't overthink it. They've been pretty clear about what they're going to do, and then they do it. So I think that they are going to slow down these rate hikes. 0.5 to me seems like almost like a certainty at this point, and but like everybody's waiting for the pivot. I think you could actually see a big pullback in the market once the pivot actually happens, and then we recover from there. So, like macro speaking, that's kind of what I'm looking for, even though I'm not a real macro trader.
Yeah, there's a lot. There's a lot. I mean, we get the second estimate of GDP this month for the third quarter again. That's going to be positive because people were stupid and forgot that it was positive the first time.
Yeah,
So we had the two negative quarters, and then we came out of it. So you know, I think I said back then like they should have sold it as a recession because you turned it around in one quarter. Um, Missed opportunity there for them. Um, I'm with you on the half point. Um, I just think we're still not getting a switch until probably the March April if at the earliest. Um, and I'm still with my long thesis on the problem is people not necessarily took money out of the market, but people had a surplus of money um, and chose to spend it on things and doing things versus like 80%, 90% on doing things versus, investments um,
right.
and
Yeah,
stuff like that, and we haven't really switched that back. Um, People are still kind of spending money, and that's the best thing you could do right now for the economy is not buy shit. It really is because that's going to draw down the demand. And you see it, the best barometer for that is airfare. If you just pick one location where you want to travel to and search a flight once a week, you'll be fucking shocked by how much those flights go up and down in price. Um, I was searching a trip to Vegas, and it was like 800 a person one week. 3 weeks later, it's like 350. Um,
yeah,
same dates and everything. But it's just because supply and demand. When it outweighs it, they can charge whatever they want. And that's probably the most hit because there's limited supply of airplane seats. There just really is.
Yeah, yeah,
Um, but that's, I mean, that's what's going to turn it. And how do you know when people are going to really stop spending money? The Fed's interest rates not really. I mean, it's doing that with cars and home loans, right? There's less of that for sure because of interest rate. But we're still going to the casino, to the movies, still going out to dinner, still going on plane trips. Um, the people with money are still doing that. So until that kind of stops, I don't see us getting back to a best. Still buying the new iPhone.
yeah, yeah. No, exactly.
I mean, that's
Yeah,
not poor.
and
It's not a poor person problem. It's the people that have a surplus of money, which is a rather large chunk of America at this point in time.
yeah. I mean, it is. I mean, it's and especially when, I mean, credit is still pretty easy to get, and the like the buy now pay later stuff and all that. So
Right.
yeah, I mean, you do see people even as they feel some tightening and inflation affects them, it's going to be like the lifestyle change lags behind the economic change. People are going to try to maintain their standard of living,
Out
even as their money doesn't go as far.
outside of the psychology of it, like the morality of it. How the hell is this buy now pay later any different than me and you getting thousands of credit card applications in the mail as soon as we turned 18, applying for them all, whether they were $250 or $1,000, and maxing them out and learning about credit? How is that any
Yeah,
different? How is it any
no,
different?
uh, it's the same. It's just it's repackaged. It's like all the Web 3.0 stuff where it's just they're doing the same thing we've always done. They just have a different branding on it. Yeah.
It's predatory lending to
Yeah.
people that are new in the game. I mean, that's all it
Yep.
is. I mean,
Yeah. It's easy. You just click a button and that's it. You fill out a credit application outside your dorm room and get your free T-shirt.
mm,
I mean, yeah, same exact thing.
the only one I ever won on in that whole thing was Columbia House.
Yeah.
I got a lot of free CDs. They never
Yeah.
got any money.
Right.
Oh, good times. Um, got anything else here? We're right about 30, so.
No, I'm good.
All right, let me cut this then.